What's up, Bitcoin Bulletin fam? Get ready for a rapid-fire rundown of the news that's shaking up the crypto world. First up, we're asking the million-dollar question. Should you be buying Bitcoin right now, especially with prices hovering near that massive $120,000 mark? We're breaking down the arguments for why it could soar and the risks that could send it tumbling so you can make the smartest move. Next, we're diving deep into the intricate dance of Bitcoin's cycle clock. Analysts are pointing to a potential final high by late October, but here's the twist. Will the massive influx of Bitcoin ETFs rewrite the history books and change the game entirely? We're exploring the rare window where policy and fund flows are dictating Bitcoin's fate. Then, brace yourselves, because the Federal Reserve is about to unleash an earthquake on the crypto market. With interest rate cuts on the horizon and trillions of dollars potentially flooding into digital assets, we're talking about a $9.5 trillion wall of cash, ready to collide with Bitcoin. We'll reveal how President Trump's strategy might be the catalyst for this monumental shift and what it means for crypto investors everywhere. And finally, a major player, LM Funding America, is making a strategic power play by acquiring a massive 11 MW Bitcoin mining facility in Mississippi for $4 million. This move significantly boosts their capacity and could be a game-changer for the mining landscape. You need to stay informed on all of this. Like, subscribe, and hit that notification bell so you never miss an update. Should you buy Bitcoin while it's under $120,000? Is it finally time to add more Bitcoin to your portfolio, even as it approaches the $120,000 mark? This year has already seen Bitcoin surge by 25%, despite an earlier dip of 18% and a current position 7% below its August peak. Its historical performance undeniably warrants attention, but the question remains, is now the right moment to buy? We're exploring both the bullish and bearish arguments for the world's leading cryptocurrency. On the bull side, Bitcoin's resilience over more than a decade and a half, coupled with its unmatched brand recognition and powerful network effect, creates a strong case for continued growth. The expanding ecosystem of products and services supporting Bitcoin adoption further solidifies its position. With a current market cap of $2.3 trillion, there's a compelling argument that Bitcoin could eventually rival gold's $24.8 trillion valuation, especially as the world becomes increasingly digital. Its scarcity, with a fixed supply of 21 million units, also stands out against gold's fluctuating availability. However, significant risks loom. Government intervention, particularly from the US, remains a wildcard. While the approval of spot Bitcoin ETFs and the creation of a strategic Bitcoin reserve are positive signs, a future administration could potentially impose an effective ban, drastically reducing demand. Another threat is the advancement of quantum computing, which could eventually break Bitcoin's cryptography, rendering the network vulnerable. While developers are aware of this risk and working on solutions, it's a long-term concern. Despite these risks, the bull case appears stronger. The durability, network effect, and the potential to capture a significant portion of gold's market cap suggest substantial upside. For many, with Bitcoin trading under $120,000, now could be an opportune time to consider investing. Don't go anywhere, because the Bitcoin cycle clock is ticking, and a massive cash injection could redefine everything. Next up, we're uncovering the secrets behind the latest Fed moves and a $9.5 trillion wall of cash poised to enter the crypto market. Bitcoin's cycle clock points to a final high by late October. Will ETFs rewrite history? We're standing at a critical juncture where policy decisions and the unprecedented flow of Bitcoin ETFs could dramatically shape the cryptocurrency's market cycle. The convergence of these factors presents investors with a rare and pivotal moment. Traditionally, Bitcoin has followed distinct market cycles, often influenced by its halving events and macroeconomic trends. Analysts are now observing patterns suggesting a potential peak for the current cycle could arrive as early as late October. This projection is based on various technical indicators and historical cycle data. However, the landscape has fundamentally changed with the recent approval and subsequent massive inflows into spot Bitcoin exchange-traded funds, ETFs. These financial instruments are attracting significant institutional and retail capital, creating a new dynamic that could override established cycle patterns. The question is whether these ETF flows, representing a powerful new source of demand and liquidity, will extend the cycle's duration, push the price to new, unforeseen highs, or perhaps even alter the very nature of future Bitcoin cycles. This dynamic interplay between traditional cycle indicators and the new ETF phenomenon is creating a unique situation with potentially historic implications for Bitcoin's price trajectory. Investors are keenly watching how these opposing forces, the historical cycle clock and the modern ETF revolution, will play out. The outcome will not only determine Bitcoin's short-term price action, but could also set precedents for how digital assets are integrated into mainstream finance moving forward. But what happens when the Fed starts slashing rates and a tsunami of cash hits the market? Stick around as we reveal how trillions in new money could send Bitcoin prices into the stratosphere. Bitcoin and crypto braced for a $9.5 trillion Fed price earthquake. Prepare for a seismic shift in the crypto market as the Federal Reserve initiates its first interest rate cut of 2025, unleashing trillions of dollars in potential investment capital. The market is buzzing with anticipation, and the floodgates are about to open. Following the Federal Reserve's announcement of its initial rate cut, the Bitcoin price surged towards $118,000, with the broader crypto market nearing its all-time high of $4.2 trillion. This move signals a significant pivot in monetary policy, shifting from an era of rising rates to one of easing. This change is expected to drive capital away from safer, lower-yield assets and into riskier, higher-return investments like cryptocurrencies. Analysts are projecting a staggering $9.5 trillion in potential capital to move into assets like Bitcoin and other cryptocurrencies. This includes approximately $7.02 to $7.5 trillion currently parked in money market funds and over $2 trillion in fixed income ETFs. As yields on these traditional assets begin to fall due to the Fed's actions, investors will be strongly incentivized to seek higher returns elsewhere. This massive rotation of capital, often referred to as a wall of cash, could provide unprecedented fuel for a sustained bull run. Adding another layer to this unfolding scenario is President Donald Trump's strategic approach to the Fed. While specific details are emerging, his involvement suggests a potential catalyst that could further accelerate the flow of funds into the market. The Fed's decision to cut rates, coupled with market expectations for 2 more cuts by year-end, underscores concerns about a weakening labor market and a potential shift in economic priorities. This environment is seen as highly conducive to Bitcoin's role as a digital store of value and a hedge against potential economic instability. The market is reacting with palpable excitement, with experts like Matt Mina and Dom Hars highlighting the powerful incentive for capital to move into risk assets. CJ Burnett emphasizes Bitcoin's role as a liquidity barometer, suggesting that expanding global liquidity will continue to support its momentum. The stage is set for a dramatic revaluation of Bitcoin and the broader crypto market as this wave of cash seeks new investment frontiers. But the big moves don't stop there. We're heading to Mississippi, where a major acquisition is set to supercharge Bitcoin mining operations. Stay tuned. LM Funding America, Inc. acquires 11 MW Bitcoin mining facility in Columbus, Mississippi for $4 million. In a significant expansion move, LM Funding America has just snapped up an 11 MW Bitcoin mining facility in Columbus, Mississippi, for a cool $4 million, dramatically increasing its operational capacity. This strategic acquisition from Greenidge Generation Holdings marks a substantial boost for LM Funding America's mining endeavors. The newly acquired facility in Mississippi comes equipped with approximately 7.5 MW of operational hash rate, powered by around 2,300 Bitmain S19 series miners. Crucially, it boasts incredibly favorable power pricing at just 0.036 per kilowatt-hour, a key factor in optimizing mining profitability. With this addition, LM Funding America's total owned Bitcoin mining capacity is set to surge to an impressive 26 MW. CEO Bruce M. Rogers highlighted that this expansion aligns perfectly with their strategy of acquiring undervalued power assets in less competitive markets. This not only diversifies their operational footprint, reducing single-site risk, but also positions them for accelerated miner deployment. The company plans to maximize the facility's remaining capacity by deploying existing and cost-effective new miners, alongside leveraging firmware optimizations that have already proven successful at their other sites. The lower electricity costs are expected to significantly reduce their fleet-wide average price. The acquisition was financed through a combination of a $1.3 million secured loan and the company's existing liquid assets, showcasing a disciplined capital allocation approach. This move is already drawing attention from institutional investors, with several adding to their LMFA stock holdings. Analysts have also shown positive sentiment, with recent buy ratings underscoring the potential upside of this strategic expansion. And that's just a glimpse of the action. We've covered Bitcoin's price potential, market cycles, massive Fed-driven cash flows, and now a mining powerhouse expansion. What a show! All right, Bitcoin Bulletin viewers, let's do a lightning recap. Bitcoin's potential surge past $120,000 is on the table, but risks remain. The crypto market is bracing for a massive $9.5 trillion cash injection following Fed rate cuts. Bitcoin's cycle clock suggests a late October high, but ETFs could rewrite the rules. And LM Funding America just expanded its mining might with a new Mississippi facility. Don't miss out on any of these critical updates. Smash that like button, subscribe to Bitcoin Bulletin, ring the notification bell so you're always in the know, drop a comment with your thoughts, and follow us on all social media platforms for even more crypto insights.